You are watching Market Watch, the brief overview of the key events from the world of finance. On Thursday, a report was published on the change in the pace of GDP growth in the United States for the third quarter of this year. The actual data exceeded the already optimistic forecast of analysts, increasing the likelihood of an increase in the Fed's key interest rate. After all, unexpectedly strong economic growth will allow the U.S. regulator not only to raise the rate, but also to keep it at a high level for a long time. After all, inflation still significantly exceeds the target level of 2%. All this put pressure on key stock indexes, intensifying the sell-off. Bearish sentiment in the stock market indicates a decrease in risk appetite, which in turn contributes to an increase in demand for protective assets. When it comes to defensive assets, first of all, many investors and traders think about gold and government bonds, but we should not forget about the US dollar. Among professional investors, it is not uncommon to hear the phrase "go to the cash." It denotes the sale, usually of risky assets, in favor of the US dollar. For example, the sale of shares. Given the extremely unstable geopolitical situation in the world, the demand for risky assets is declining, continuing to support the US currency. And although the US dollar does not show steady growth, it manages to stay close to the maximum values of the current year. The situation is similar in the precious metals market. Gold continues to consolidate near the reached highs, but demand over the resistance area of $1980 to $1985 per ounce remains very weak. The fact is that for further growth, which is most likely to end with an update of the historical maximum, a very strong bullish fundamental factor is needed. Obviously, a change in the yield of U.S. government bonds or a general change in the situation in the U.S. economy is not enough to implement a bullish scenario. This requires a further deterioration of the situation in the Middle East. That is why we hope for stabilization of the situation in the region and as a result of sales in the precious metals market. Shifting to the cryptocurrency market, I would pay attention to the similarity of the situation. Bitcoin continues to test the strength of the technical resistance level at the $35,000 mark. But without the appearance of the expected approval of the application for the creation of a Bitcoin ETF, the risk of the collapse of the largest cryptocurrency increases daily. After all, the last wave of growth was provoked by the appearance of information that the ticker of a fund managed by BlackRock, called the iShares Bitcoin Trust ETF, was listed. In fact, the financial giant BlackRock is already fully ready to launch an investment fund and is only waiting for official permission from the U.S. Securities and Exchange Commission. But if there is no such resolution in the coming days, investors may start taking profits on previously opened long positions, which will provoke a wave of sales. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.